Welcome to Business Daily right here on Trust Television. I am Yusuf Akogu. Apologies for the technical issues there. That's me fixed. Of course, we go on with the show this morning. And of course, as usual, we begin with the top business stories. Glad to have you back. Now we look at what is happening in the global oil market. Indeed, it's good news for Nigeria as the Organization of Petroleum Exporting Countries, OPEC, and its allies have agreed to another output cut there that will increase tighter supply in the global oil market. Of course, that is expected to drive up prices of crude oil in the international market. Although the sanction of the American on Iran and of course this new plan by OPEC is indeed a welcome development by many oil producers who rely on crude oil revenue to fund their major expenditure. And of course, Nigeria, as you know, is one of them there. Now, looking at how the oil prices are looking at this morning, if you look at the global Brent benchmark is currently up at 0.31%. Of course, about 22 cents it added to the previous day price there to currently stand at $72.22 per barrel of the commodity. If you look at the OPEC basket, where you have Nigeria Bonny Lights, one of the best crude in the international market, is currently up by 0.21%. It appreciated by 50 cents, talking about the amount of dollar it added to the prices, and currently it's traded at $73.13 there per barrel. Indeed, at the international market today, very good one, good development for Nigeria. We hope that this momentum will be sustained. Talking about price of crude oil going on the upward trajectory. Moving on now, we want to look at two critical issues this morning on the business program. We're looking at issues around the Nigerian Exchange Limited. There have been some negative sentiment in the market in recent times. We'll look to review how the market has performed so far this week. Of course, my guest, David Adori, will join me via Zoom from the trading floor of the Nigerian Stock Exchange. Also on the show, we'll look at the declining inflation rates and, of course, the high cost of living among Nigerians. Of course, we'll look at how, of course, the inflation number is dropping, and on the other side, the cost of living is still very high. Of course, is there a difference between the headline inflation and, of course, the reality on the ground? Steve Nwachukwu, an economist, will join me for that conversation. But now, let's go to David Adori, of course, who is the Vice Chairman of the Board of High Cap Securities. He joins me via Zoom from the Stock Exchange trading floor in Lagos. Good morning, Prof, as we usually call you. All right, we'll reconnect with Prof after this break. Don't go away. Glad to have you back. It's the Business Daily right here on Trust Television. We have David Adori, the Vice Chairman of the Board of High Cap Securities, joining us now via Zoom from the Stock Exchange trading floor in Marina in Lagos. Good morning, Prof.
Thank you very much, Yusuf. Very happy to be with you from the floor for the first time.
Always a pleasure. Always a pleasure, always a pleasure. Tell us the stock market performance for the week. We've seen some negative sentiment there across various trading tables. What is responsible for that?
Yeah, the bearish mood of the market, which persisted for perhaps the past 3 or 4 weeks, started from the banking sector, and it eventually got to the other sectors of the market. But however, we are seeing a little turnaround this morning. But let's look at what really happened in the market in the past few weeks that perhaps bearish events in the equities market. You know, at a point, a lot of the banks came up with information to the investing public that there will be delay in the release of their full year 2024 results. And so that may have affected investors' confidence, and also caused some anxiety in them that perhaps their expectations may not be met. Then, not long after that, other shocks were coming in from the external environment, occasioned by the heightened trade war between the US and its trading partners, especially those in North America and then China. You know, so by contagion, the equities market was probably affected. Then there was also that crowding out effect, because within that period, the primary market treasury bills was quite active, and the rates had also risen. So that may have caused migration of financial assets from equities, you know, to the debt market. But along the line, what started in the banking sector spread to the other sectors of the market, affecting the oil and gas sector, you know. But it's like the situation is reversing gradually now, Yusuf. Thank you.
Indeed. But Prof, one would have expected that with the inflation numbers, I mean, looking somehow positive, the impact would have been felt positively on the stocks, on the stock trading in the market. Don't you think there's something missing somewhere?
No, I don't think that inflation figure was given any consideration by investors. Because if you look at the recent offerings of treasury bills in the auction market, it's not reflecting the massive decline of inflation rate, because the discount rates at which treasury bills are coming out, they are still higher. And so one would therefore also think that investors were probably not bothered about what the statistics from NBS was saying, but they were looking at other factors, you know, real factors on ground. Because, you know, the last time we discussed, we said that the inflation rate had declined by the time the CPI was rebased by over 10 points, 10 percentage points, which was massive. But that change was not reflected in the realities on ground. And then the last figure that was also released for inflation, I think last week, showed that it had further declined from 24% to about 23%. And yet, investors are not reacting to that. And like I mentioned, neither did the CBN react to that when they were fixing the discount rate on treasury bills quite recently. So the market has been apathetic to the figures, the numbers that are coming out from NBS, but the market is looking at the realities on ground to form opinion on the direction the market should go.
Indeed. Prof, talk to us.
Thank you, Yusuf.
Talk to us about the first holdco 150 billion naira right issue, 25% oversubscription, paving way for private placement of 350 billion naira. What is the implication of this on shareholders and, of course, subscribers as well?
No, it's morale boosting. Quite impressive that they were able to surpass their projections for the rights issue, that the rights issue was oversubscribed, indicating the high level of confidence that shareholders in First Bank continue to have in the future of the bank. Well, however, there are implications concerning the fact that the bank now wants to move to the next level of doing a placement, going for a placing of about 350 billion naira. So that in itself should give anxiety to existing investors, because it can water down their holdings in the bank and perhaps elevate the holdings of some core investors in the bank, who will then have excessive overriding powers as majority shareholders in the bank. One would have expected that instead of doing a placing, that the bank should have done a public offering, wherein the investing public will have the opportunity to be part of it, and then the existing investors too would also have the opportunity to increase their holdings in the bank. But before a bank goes for a placing of this magnitude, it means that the existing shareholders must have been carried along, because it requires a unanimous resolution of the board for such a placing to occur. So I would therefore assume that the shareholders of the bank have endorsed the move. So that's it, Yusuf.
All right. They're talking about the shareholders of the bank endorsing this move. You talk about, instead of going for private placement, they should have done maybe a public offer so that more investors can come in. Is there a fear among the already existing investors that, outside investors, if the price issue is open to the public, the outside investors may bring in more money and, of course, probably have a strong control than those already existing investors?
Yes, Yusuf, you captured it aptly, quite rightly, because that is a suspicion right now, that there is a surreptitious move to bring in a new investor, or give an enablement to an existing investor via this placing to completely solidify his or her holdings and have clear majority, that can enable such an investor unanimously decide the future of the bank. So there are contending powers, jostling for control over First Bank. There are three axes in there that have been jostling for control. So there is suspicion that perhaps one of the power points is making a surreptitious move to now finally wrest control and power of the bank, so that it will have a domineering influence on the future of the bank, the policies that will drive the activities of the bank. So we just hope, because we are watching and hoping that the investors are unanimous in the agreement. They may have endorsed this move via an EGM or an AGM, and hence the bank is making moves to proceed on this line of action. Yusuf.
Indeed, Prof, as we wrap up, earlier you talked about the issue around treasury bills. We're seeing that there's a clear correlation between treasury bills rate declines and, of course, the volatility in the FX market. As usual, we see API selling off their holdings to obtain Naira for repatriation. What do you think can be done? I mean, there's so much talk about this volatility. It's affecting the equities market, the treasury bills, and of course, almost everything across the sector. What do you think can be done to ensure that we have stability in all these markets?
The markets are fully entrenched in the fundamentals of the economy. And so if the economy remains assaulted by very weak fundamentals, then of course the financial markets will also remain volatile. Because as you are aware, we were spoken about the inflation angle of it, that is sudden decline of inflation by 10 percentage points that is not reflecting on the realities on ground. But we are also seeing that the financial market is not acting in tandem with the declining inflation numbers. Ordinarily, if the inflation numbers were something to go by, then of course the pressure on the naira and the foreign exchange market will abate.
All right.
And so the naira will strengthen over there. With the naira strengthening in the foreign exchange market, that will also increase investors' confidence. So with inflation coming down, if that is the real situation, then we'll see equities rising. Because when inflation is declining, it means that yield on debt will fall at the end of the day. So financial assets will migrate to equities. But as it is now, it's like you have a candle that was burning at both ends in the past, but the fire, the light at both ends have been extinguished. The equities market is reacting differently. The debt market is reacting. Like you mentioned now,
Absolutely.
while the debt market, the rates appear to be getting weaker because demand is reducing.
Hello, Prof. Are you there? Hello, Prof. We seems to be having some network issue there with Prof. We hope you get back to tell us how the market is currently looking like, and of course the likely outcome at the close of today's trading, the last trading day for the week. Of course, we look to see how that. Prof, I have Prof back now. Hello, Prof. Are you there? Okay, we're still having some network issues there with Prof. Of course, we're looking at the Nigerian stock market performance for the week. And of course, if you look at the trend so far, it's been in red. So much negative sentiment across various trading counter. Not so impressive there so far this week. We're thinking that the positive numbers coming out from NBS, talking about the inflation numbers, receding, will indeed have a positive impact on the market. But according to what the Prof said, that is not investors' consideration as well. So investors are looking at what is happening around the global market. Largely, the trade war between US and the trading partners is part of the major contributors of what we're seeing, the uncertainty in the market, especially as foreign investors continue to stay on the window, watching what will happen, whether there is going to be stability in the Nigerian in the economy, largely due to the ongoing issues around forex is also not exonerated as well. The issues around the treasury bills, the yield is becoming very, very low because of the low patronage. People are probably they are not really so buoyant to invest so much in treasury bills as they are actually used to. So we look to see how that will pan out. I hope I have Prof back now to speak to us about the current state of the market and of course how the market is likely going to close today. Hello, Prof. Okay, we seem not to have issue with getting Prof back there, but Prof, we must thank you for your contribution on the show this morning. We appreciate your time and of course your contribution as well. Have a very good day on the trading floor there. We'll go on a very quick break. When we come back, we'll look at the issues around cost of living and of course the declining inflation numbers in Nigeria. Don't go away. Glad to have you back. It's the Business Daily right here on Trust Television. Before we go into our next conversation, which is around the issue of inflation. Inflation rate is on the decline, but is not reflecting on the standard or cost of living across the country. Of course, like you were saying, in Jigawa State, the tailors, they call them fashion designers in some places, they are lamenting low patronages, despite the fact that at this period, usually, because Salah is indeed very close, not far away from us. In a few days from now, we'll be celebrating Salah. Of course, many people are not patronizing tailors or fashion designers as they used to due to the lack of disposable income. This report from Jigawa will tell us more.
Across the state, most of the youth have given up on efforts to buy new clothes such as shadda and yats as the Salah celebration approaches due to financial constraint. This has left tailors with no choice but no appeal to the governments to fix the economy so that Nigerians can regain their purchasing power, which will lead to better patronage for their services. Malam Yusuf Nasur, a skilled tailor, has witnessed this struggle firsthand. His workshop, once bustling with customers, now lies idle due to the scarcity of sewing services, as people are forced to prioritize their limited resources, leaving little room for non-essential expenses like new clothes.
I'm a tailor at the Takur site in Dutse. We are seeing a marked decline in the amount of work available compared to the previous year. While we still have some customers, the volume of others has decreased significantly.
Another tailor, Aliyu Abubakar, corroborated Nasir's position, saying parents are not forthcoming with new clothes for their children like other years.
I'm Aliyu Abubakar, a tailor in Takur. My business is facing several challenges. The most pressing is the unreliable electricity supply, which directly impacts our productivity. We are also experiencing a shortage of work. Currently, the majority of our orders are from parents needing new clothes for their children. It seems that only those in political circles are benefiting from the current economic climate. We are managing to get by, but it is a struggle.
Every year, Muslims scramble for tailoring services as the Eid celebration draws near. But this year, it is a different ball game as the harsh economy has dropped many of their purchasing power.
Indeed, fashion designers, they're complaining about the low patronage there. From there, we go to issue around cost of transportation as well, as building materials dealers in Lagos are complaining about the cost of transportation affecting the prices of building materials in Lagos. Let's take that report.
The building materials industry plays a vital role in societal development, shaping both residential and commercial infrastructure. However, escalating material costs pose a substantial challenge to the construction sector and aspiring homeowners. The root cause of this price surge can be traced to increased transportation expenses. Timber and wood suppliers who source materials from forest are allocating a larger portion of their earnings to transportation costs, exacerbating the overall price inflation. At Odoanro Market in Ogbaguda area of Lagos, a hub for local and imported building materials, traders, contractors and engineers are grappling with soaring prices and diminished customer demand. For example, the price of planks, once a relatively affordable option, has quadrupled. Planks previously sold for 2,500 naira now command 10,000 naira, while those priced at 5,000 naira have risen to 15,000 naira. Office plywood, previously priced between 6,000 naira and 7,000 naira, now sells for 20,000 naira. Alhaji Ilesomi Bamidele, chairman of the Odoiro Building Materials Market, expressed deep concern over the daily fluctuations in plank prices.
My area is selling woods, any kind of woods, and this wood I'm talking in Lagos State, and my business was in Lagos State. There's no wood, no plank in Lagos State to buy. You have to go to all different states like Akogu, Osun, Ondo, Ekiti, whatever, Ogun, Oyo, before we get the planks. And the transportation itself is doing many things.
When they will be complaining every day that when we carry wood 30 naira today, tomorrow they will change it to 100 naira. By the time we are asking them different questions, they will be saying that what they are using the money for, from transportation, from food, to feed their family, even school, to pay their children's school fees. So they need to increase their labor. Live from there. Talk to those that sell to us all those materials, as in wooden. I'm talking of wooden now.
Depends on how you bought the thing. As the thing plenty, the money go high. So if you bought like 100 pieces, if you bought like 100 pieces from a Muslim to here, you are carrying 35,000, some 40,000 for transport.
Buy the normal HGF, which is a foreign plywood. We used to buy it at the rate of 14,000, 15,000. But presently now is now 36,000 at the market, while the MDF is now at the rate of 22,000.
Things are very, very expensive. Like let's talk about nail. As at January 2024, we used to buy a bag of nail. We used to sell bag of nail at the rate of 9,000 naira. But now we sell it at the rate of 27,000 naira. Bundle of zinc, as at last year January, it was 20-something thousand naira, but now bundle of zinc is 50,000 naira, 40-something thousand naira, and so on like that. Different goods like that, different markets in building materials like that.
Currently, most of the things have gone up. Most of them are double the former prices. Like for instance, we used to sell some papers for 400 per yard. Now a yard is 800 naira, which is quite on the high side. Then when you
interesting there, Nigerians, complaining there about the high cost of living. Let me bring in Steve Nwachukwu, an economist, to react to some of these complaints raised by Nigeria. Good morning, Mr. Steve.
Good morning, and thanks for having me.
Always a pleasure. You listen to Nigerians complaining about the high cost of living despite the slowdown in inflation numbers. What do you make of that?
Well, I think that is to separate the realities from what the numbers are saying. The complaints of Nigerians are the reflections of what we may call the variables that actually bring the real data or the real survey that MPS needed to conduct and give us the reality numbers, the cost of energy, the cost of fuel. If you listen to those reports, you find out that everything was nearly boiled down to cost of production, from the cost of transportation, cost of fuel, cost of material, the exchange rate. These are the things that are fueling this very high rate of these very goods and services and items that Nigerians are meant to buy at a higher price. And if you take a reality check again, you also find out that recently the MPS rebased our CPI, the Consumer Price Index, and they use a base year of 2024, which is quite narrow against what we had earlier before now, like 7-8 years or thereabout, from 2009 to 2023. So it's approximately more than 10-12 years involved. So now we only have a single year as a base year, which is just 2024, and where we are in 2025. So given the fact where we saw a reduction in our inflation number from somewhere around 34.8% to a current position of 24.4%, and successively we also saw a reduction in the November inflation numbers, also lost about 122 basis points to the current position of 23.18%. So the fact is that the basket of items that the variables that relates to this very CPI was also adjusted, and which also favored the numbers in the sense that we have a basket of food items have been adjusted a bit in the production, in the industries, name it, all of those criteria, all of those layers of or yardsticks to tell us where our CPI actually is were all adjusted, and that is why we are seeing a relatively lower number in inflation, which does not take cognizance of this very reality check I talked about in respect to the cost of fuel, which is the energy, and the cost of APS actually neglected a lot. That is why we are having a lesser inflation number, or a lesser inflation number against the realities that Nigerians are crying loud.
Mr. Steve, why are we having this, I don't know if I should call it discrepancies, because the reality appears to be different from what the NBS are telling us. Is it a question of NBS not doing its job properly? Because when you speak to real Nigerians and you price some of these things, that you're coming to give us the numbers eventually, and it's not in tandem with the reality on the ground, who should we hold in this regard? Is NBS not doing its homework properly, Mr. Steve?
Well, I think they will have every reason to justify their numbers, given the fact that what is good for you may also be bad for other sectors. And I think let's give it to them that they did a good diligence, a good survey. They did a justifiable job to come up with these very yardsticks that suggest to what numbers we have today. Let's believe that they have the best of intentions, they have the best of wishes, how they come about with this variable. Like I said, there are baskets of items to weigh our CPR. So they have done their best with the best intentions and with the best intentions to come with those numbers, or come with those yardsticks that suggest to where we are in our inflation numbers. But another thing is also to say that the reality check, like I talked about again, is really not reflecting on how people actually feel about the inflation numbers, or how the people feel about those goods and services, items available and commodities available to Nigerians, like the transportation and like the food items, and name it. It seems like, yes, there is a total disconnect from the yardsticks or the variables that MBS use and what Nigerians are actually feeling. Nigerians quite felt that no, we can't be having a 23.18% inflation when we are feeling like actually we are buying items where the inflation is choking us above 80, 85, 90% inflation numbers, given the fact the items we are buying, you did your base year, you did your survey, you did your computations, and you are quite relatively with a better number, while in reality check, Nigerians are really feeling bad. Nigerians are feeling a lot of pains in buying those items in the market. So I think, yes, of course, like I said again, let's give it to them that the NPS had the best of intention, and they have the best of the will, and they did the right thing. But the question is, how do you mitigate, or how do you draw closer to the people from the point of view that Nigerians needed to feel better when the numbers are also feeling better? In the sense that let's not continue to have a happy numbers or beautiful numbers, but hungry and angry people. I think that's what the NBS needed to be looking at, and also the fiscal policy makers needed to also consider. Yes, there are various variables that can be used, and you can justify why you use them. You can decide to do your computation, because we are talking about looking things from different views, just like they changed the methodology in our unemployment, and it's international best standard they use, but it's not good for our own client. Remember, our unemployment was around 41 to 42%, and when the methodology was changed from the working just for an hour for a day, for a week, it justifies that you are employed. You saw the unemployment drop from somewhere around 38, 41% to a current position of 4.3%. So it can also be justifiable from that perspective. Yes, of course, this is the best international standard, which is the international labor standard. International labor standard means it's the world best standard. So that's why this argument about the methodology, the argument about the variables, the yardsticks used could always be justified by those who apply them. So I think it's a question of having a reality check, feel the pulse of the people, and know truly the best you can use to apply. Nigerians are unemployed, but the unemployment ratio or rates suggests that we are just having only 4.3% unemployed people. But in reality, you know what Nigerians are passing through, and the number of people who are without job or who are underpaid. Thank you.
Mr. Steve, I like the way you talked about the issue of methodology. If we are a serious country, do you think the focus should be on the methodology or on the, way to improve the economy so that the livelihood of the people can be better?
Oh, this is really a very tricky question in the sense that we are talking about a political dispensation, the views of the people versus how the government wants us to the rest of the world to view us. So they want to have an image that, yes, during the administration, they have a very better numbers from the unemployment to statistical numbers from the revenue side. And you saw how the revenue have grew from somewhere around 9 trillion to a current position of 41 trillion as projected or estimated in 2025 budget. So these are very beautiful numbers, but in reality check, there is a total separation, or there is a total disconnect of the reality, in the sense that the purchasing power of the same values or the same money or the same volumes of money. What was the purchasing power of Naira 2, 3, 4 years back? Compare in this very period, you had a very sizable, bigger number. So I think it's a question of the psyche and the body language or the disposition of those in political, the fiscal authorities. What are they actually looking at? They're looking at organic and inclusive growth that imparts in the lives of Nigerians, or are they focused in beautiful whitewash numbers, or what have you, just for the glory of having beautiful numbers, but the people are hungry? So I think it should be speaking more of the priority of those in the authorities, what they really want to come up with. Like I said again, whatever perspective you belong, there are numbers, there are yardsticks, there are perspective, or there are things to justify your position. Thank you.
Indeed, things to justify your position. Like you rightly put, the political class or the government is interested in having good numbers, but Nigerians are interested in having good life. Having a good numbers without having a good life, what credit is there to be taken by the government in power when you are showing out good numbers and it's not reflecting on the livelihood of your people?
Again, yes, I think I wish you are asking any individual or any of the ministers this question. Why would you choose this very way when you have beautiful numbers, you have beautiful data and statistics, but the people are not really saying, laughing or smiling with you? Yes, you have fuel available, you have the price well above the reach of the poor, well above the reach of the middlemen. And you think, yes, of course, we have totally deregulated the sector. You can buy as many volumes you want to buy of petroleum products. We don't care how much you buy it. And yes, these are beautiful statistics and beautiful numbers, but in reality, how many of Nigerians can afford to buy those items when they turns out those input costs, turn it out as output to Nigerians? So I think that's what should be the priority of the people. On one hand, they will tell you, yes, let's suffer in the interim, for the meantime, that in the nearest future that we are going to gains, we are going to harvest the gains of these very policies and decisions. Yes, let's for now have beautiful numbers that will attract foreign investments, that possibly will give us a prospect of winning elections. But the question of how will the people react to that, or how will the people perhaps judge you by how you made their stomach infrastructure to look like. So I think it's a question of mixed priorities, and perhaps they need to balance it, and which I'm sure they are conscious of that, and definitely they will look away from this that suggests that is a propagandist disposition, where yes, of course, you continue to speak good, continue to turn out statistics that suggest that yes, you're quite in a very favorable positions, your economy is doing better, and the rest of that, and why the people are wallowing, suffering, hungry, and living in pains. I think they need to balance it so that Nigerians can also smile as we're also having these very beautiful numbers. Thank you.
Indeed, which I think is more important. Nigerians will smile alongside the beautiful numbers. It's not having beautiful numbers at the expense of Nigerians. I must thank you, Steve Nwachukwu, an economist and also a stockbroker. Thank you so much for your time on Business Daily today.
Always my pleasure.
Thank you so much. And with that is a wrap on the show today. We'll be back again on Monday. I am Yusuf Akogu.